This presentation is for Chapter 1, Introduction to Managerial Accounting. In this Part 2 of Learning Objective 3, we are going to learn how to complete the Schedule of Cost of Goods Manufactured. So there are 3 steps involved in calculating the cost of goods manufactured, which is the total manufacturing cost of the goods that finish the production process in a given year. First, we would calculate the direct materials used. We would use that information to calculate total manufacturing cost incurred during the year, and then use that information to calculate cost of goods manufactured. This slide shows step 1, calculating direct materials used. So to calculate direct materials used, you take beginning direct materials, add to that any purchases of direct materials including freight in, and that gives you direct materials available for use. From that, we subtract ending direct materials, and that gives us the direct materials that were used during this period. So as shown in this slide, the direct materials used would be $355,000, and that information is needed to calculate the total manufacturing cost incurred during the year. In this slide, we are going to calculate the total manufacturing cost incurred during the year using the information from the previous calculation, direct materials used. So to calculate total manufacturing cost incurred, we take direct materials used, direct labor cost, manufacturing overhead, and we add those 3 amounts together. That gives us the total manufacturing cost incurred during the year. So on this slide, we see that there was direct materials of $355,000, direct labor of $169,000, total manufacturing overhead of $83,000, and we got total manufacturing cost incurred of $607,000. That information is needed to calculate cost of goods manufactured. This slide shows the calculation of cost of goods manufactured. This calculation begins with beginning work in process inventory. We add to that the total manufacturing cost incurred that we calculated in the previous slide. The total of those 2 amounts gives us total manufacturing cost to account for, and we subtract from that any ending work in process inventory. That subtraction then will give us cost of goods manufactured. That is the amount that we will use in the cost of goods sold calculation in the income statement. This slide shows us the total schedule of cost of goods manufactured. So we can see that each step that we completed in the previous slides is shown in this schedule. First, we calculated the direct materials used. Then we calculated the total manufacturing cost incurred during the year. And last, we calculated the cost of goods manufactured. So this just gives the users of the financial statements, or the managers, the detail on the calculation of cost of goods manufactured. We will use cost of goods manufactured to calculate cost of goods sold on the income statement. This calculation begins with the finished goods inventory at the beginning of the period. We add to that cost of goods manufactured to determine cost of goods available for sale. From that, we subtract our ending finished goods inventory to get cost of goods sold. This slide shows the income statement for Smart Touch Learning. So in this income statement, we can see cost of goods sold. So cost of goods sold is subtracted from net sales revenue to determine gross profit. Then we subtract our period expenses, which are total selling and administrative expenses, to determine operating income. To operating income, we would add or subtract our other income or expenses to determine income before income tax expense. From that, we would subtract income tax expense to determine net income. This slide summarizes the flow of the cost through the inventory accounts. So we can see that first we calculated direct materials used, which was needed in order to be able to calculate cost of goods manufactured. And cost of goods manufactured was needed in order to be able to calculate cost of goods sold. Also, within each one of these calculations, we were subtracting our ending inventory amounts for direct materials, ending work in process inventory, and ending finished goods inventory. Notice in the calculations that are shown on this slide that they all follow the same format. You start with your beginning balance, you add to that any additions, and subtract any ending balance to get either the amount of direct materials used or the cost of goods manufactured or the cost of goods sold. Using the schedule of cost of goods manufactured, we can calculate the unit product cost. So for instance, in this illustration, we determined that cost of goods manufactured for Smart Touch Learning was $660,000. If Smart Touch Learning produced $2,200 tablets during the year, then we could divide that into cost of goods manufactured to determine the unit product cost of $300 per tablet. Also, we can use the unit product cost to determine cost of goods sold. If during the year Smart Touch Learning sold 2,000 tablets, then 2,000 tablets times the unit product cost of $300 would give us cost of goods sold of $600,000. And that is the conclusion of the demonstration of Part 2 of Learning Objective 3.